This bell will ring again. These seats will be full. Our children will play together, and we'll have dinner with friends. We'll hear the laughter and feel the energy of a Friday night. We'll be back stronger than ever. And ABC Action News is here to help with the Rebound Tampa Bay. Everything you need to get back on track during these difficult times. From financial recovery to putting food on your table and more. All in one convenient place. Visit abcactionnews.com/rebound to get started.
Hi everybody, Taking Action reporter Jackie Calloway. Joining me today is Emanuel Rivero. He is actually with Money Management International. They are a nonprofit credit counseling debt help entity, and they're nationwide. Thank you for joining us. How are you doing?
I'm doing well, Jackie. Thanks so much for having me.
Tell me, what kind of issues are you guys hearing? Who's coming to you for help? How busy are you right now?
Yeah, we are getting a lot of phone calls right now from folks that are really trying to understand what they should be doing about their rent payment, their mortgage payments. There's questions about credit cards, and we're getting a lot of different clients that are reaching out for help and guidance.
Let's talk about house payments. We did a story, we interviewed you for a story, letting people know that some major lenders, some major banks were actually letting people defer 1 or 2 payments. What do people need to know about that if they don't know about it already and how it works?
Yeah, absolutely. Usually that's called a forbearance, and it's important to understand that a forbearance is not forgiveness of those payments. And normally what's done is you don't have to pay for, let's say, 1, 2, or 3 mortgage payments, but at the end of that deferment period, you're going to need to come up with a way to pay that back. Either a lump sum payment, you'll want to take the amount that you have past due or the amount that you missed, and lenders will also let you do a payment plan, or certain lenders will also let you take those payments and apply them to the back of the loan, which will extend your loans. So the most important part is understanding what happens at the end of your deferment period and talking to your bank about what your options are.
Exactly, because I don't think a lump sum at the end of 3 months would for so many people right now. Speaking about houses, the interest rates are so low right now. If someone's thinking that they can lower their house payment by refinancing, what advice do you have?
Yeah, it's really important to understand where your equity is if you're looking to refinance. Do you have enough equity in the property so that you're able to, lower your payment? If you need to take some cash out, you can look into a cash out refi, but you need to understand where you're at there. The second item is really your personal credit rating. It seems like some lenders, especially now, are tightening up their lending guidelines, and so it's really important to look at how you're doing from a personal credit standpoint before getting into a refinance situation.
So speaking of trying to get money to pay the bills, because so many people are trying to prioritize food and keeping the lights on versus making the car payments, what do you say for people who are not retirement age and they're looking at pulling money out of their 401k to get by right now?
Yeah, normally we try to advise against it. Part of the CARES Act provisions will allow you to pull up to $100,000 without the 10% penalty and the 20% withholding for taxes, as long as it's done within 2020. The issue that I normally have when advising folks there is that even if it's penalty free, you're taking your money out probably at a loss right now. And so you're basically locking in those losses, because chances are, depending on what kind of funds you had in your 401k and what kind of things you were invested in, your balance has probably also taken a hit. Before pulling money out of your 401k, take a look at that budget, take advantage of deferment options, see if you can come up with income a different way, and really look at that as a last resort.
So right now there's no penalty. Understood, it is a method of last resort. If someone just pulled 5 or 10 grand out just to get through the next month or make next month's bills until maybe the furlough is over for them, do they have to pay it back?
They would need to pay it back essentially, and that is still going to be counted as taxable income. Now, they're definitely going to want to pay themselves back if they pull that money out. A lot of times it's taken out as a loan, especially if it's a 401k or a 403b.
So the bottom line is the only upside, if you were to do it as a means of last resort, would be the lack of a penalty right now.
That's right. The lack of a penalty.
So speaking along the lines of things that a lot of experts say you should not consider unless you are really, there's no place else to go, is bankruptcy. I suspect we might see more of those in the coming months, considering all that people have been through. What do you say when a client is saying, Emanuel, should I be filing for bankruptcy?
Yeah, I really ask them the question of future affordability, right? I know that these are dire times right now. Maybe, your bills are stacking up, but will your future income potential require you to file bankruptcy? And so I really dig in with clients and advise them to really check in where you are and whether you're going to be able to bounce back. Now, usually folks that are filing bankruptcy have had previous economic and financial mishaps in the past year, in the past couple years. It could be health-related issues. And so that's a different conversation. But somebody who has been temporarily impacted by this crisis, I would seek alternative methods of resolving for your debt. Otherwise, definitely speak to an attorney and see if it's a viable option for you.
Thank you for that. Continuing on with affordability, I think the normal household probably has a house payment, probably has at least one car payment. And so it's the same kind of thing. Considering considering car payments these days are $300, $400, $500 or more for 5 years or longer. Some of these cars, as you know, are financed very long periods of time. For people who simply can't make the car payment, there's also auto lenders out there willing to defer. Talk to me about how that works. Does it work a lot like with the mortgage payment deferment?
It does, right? So first you need a lot of patience because you're probably going to be on the phone with them for a little bit while they're helping other consumers, but really stick it out and reach out to that lender. If it's a car note, just be willing to talk about deferment options to see what can be done during this temporary period of crisis.
And so what that would typically look like, well, let's talk about the example that you and I were talking about earlier. We had a viewer contact us. She and her husband both have a car. Both cars are financed with two different lenders. The one lender, Honda, said, absolutely, we'll let you defer 2 payments. We will tack it onto the back end of your loan. It gave them, because the wife had been furloughed, it gave them some breathing room for 60 days with the car payment. The second car lender for the second family car said, we'll let you skip 1 payment, but you're going to be paying simple interest daily for the next 4 years. And she did the math on that, and it was like thousands of dollars in balloon payments. So I wanted to ask you, what are the questions you should ask if you go to your lender and say, hey, can I defer a car payment or 2?
Yeah, absolutely. The questions we should be asking is what's going to happen with those 2 payments? And in the first example, I mean, it was a pretty straightforward answer, right? We're going to extend your term by about 2 months, and it's going to pretty much even out with the addition of 2 months of payments at the end of that original loan term. When somebody mentions, and you're asking about deferments on a car loan, as soon as somebody says simple interest or your lender is really talking about those terms, you should really step in and ask what really happens with these payments. And that's where I would start.
Get something in writing.
That's right, absolutely. Get it in writing, and how is it that I'm going to be making this back up? And we've seen options where, like you mentioned, folks are going to end up paying a lot of money if they don't read the fine print and really understand what they're getting into.
Let's get into something most people deal with, and that is credit card payments. I just read this morning that credit card companies on an unprecedented scale this last month are either canceling accounts or they are lowering the credit limit, how much you can charge. What's your recommendation for how people should handle credit card payments right now, especially the cards that they have that are high interest? I will say this, I talked to a friend not long ago who has one of the big name credit cards, and she was shocked to find out that after the 0 interest introductory offer expired, it shot to 23%.
Yeah, absolutely. So credit cards right now are also offering similar deferment terms. A lot of lenders, a lot of what we call bills are looking at different options. So if you have the means, really don't take advantage of the deferment. You don't want to take a chance with any negative reporting. So if you have income and you have means, we certainly recommend keeping in place with your payment. If you're having issues, again, a lot of the credit card issuers are offering online portals for COVID-19 assistance. So you can either try on the phone, but a lot of the major credit card issuers are also offering online forms and online options. So they're understanding that folks need help, and they're trying to improve their processes to provide assistance.
When you're working with your clients, because I know you guys do debt assistance and relief, all day, every day, whether we're in a pandemic or not. What's the advice? Like, let's say that you have 3 credit cards of varying interest rates and varying balances. Is the best advice that you pay on the one the most that has the highest interest rate?
Usually it would be. It could be the highest interest rate, and then that's one way to pay off the debt. The other way to look at it is to take a look at the smallest balances. And if you attack those first, then you can apply those payments to the other debt. And so there's a couple of different ways. When you're looking at 2 to 3 different cards, if you have enough available balance on one particular card, and that available balance is what's helping you stay afloat, you may want to prioritize that particular account, just because if that's your only means of getting groceries and kind of getting by right now, I would look at the one that has the most capacity or available credit in there.
There's been a lot pivoting now to student loans. I'm trying to cover all of the big things that people are facing. I know there's a lot of relief out there right now for student loans under the CARES Act. And different provisions. Can you just kind of run down some of that for us, for anyone who does have student loans, what they need to know, what's available to them, and what relief has been offered?
Yeah, absolutely. The federally backed student loans are basically payment deferred and interest deferred through September 30th of 2020, which basically means that if you had an auto draft set up for your student loans or you've been making payments, you don't need to do that. One of the benefits, though, is that if you can continue to make payments, all the payments that you make right now for student loans would be going straight to the principal because the interest is suspended. And so that is automatically available. You don't need to pay anyone to set you up with any kind of student loan assistance. It's something that the federal government is taking care of automatically.
So we've talked a lot about we're aiming for people who've been financially impacted by COVID-19, which is millions. For those of us lucky enough to still have a job, for people who still have a job, they are still working, they have not taken a significant cut in pay, they have not taken a significant cut in hours, they probably shouldn't be deferring anything right now, would you say? Because no matter what, you still have to pay all of this, whether it's the credit card, the car payment, the house payment.
Yeah, absolutely. We don't recommend that anybody that has the means to continue to make their payments on their obligations, that they take any kind of deferment assistance. One of my biggest drivers for providing that advice is that while the CFPB, the Consumer Financial Protection Bureau, while they have asked lenders and banks to not negatively report to the credit bureaus during this time, that's just guidance that's being provided. There's no guarantee, unless you get it in writing, that you're not going to be impacted. So really, we need to leave those deferments to the folks that really are being impacted, and we recommend that you stay the course if you're able.
And for people who may have been considering retirement before this, or nearing retirement, or planning for retirement, chances are the money they were going to use to retire, their 401k, maybe investment accounts, those right now might not be looking too good. What's your advice for people who are kind of looking to downsize or completely get out of the workforce before this happened?
Yeah, it's time to really crunch numbers. And if you have a certified financial planner on your team to do that, I would recommend to really analyze what's left in your nest egg to see what kind of impact was made there, and really see if you're able to still retire it just under different terms, right? Maybe it's not downsizing to like a 3-2 house somewhere. Maybe it's a 2-1, and can you still do that? So really, it's time to crunch numbers. Let's look at what's left in the nest egg and really make a decision as to whether retirement is the right thing to do at this point.
Some people, it's, we're a month away from June 1st, which obviously marks the start of hurricane season. And this is the time that certainly some veteran Floridians who really know what these hurricanes can do, start, allocating some money for whether it's a generator or just some beefed up supplies or maybe securing their home. If people need money for like a project like that, something that they deem necessary, it's not just frivolous spending, it's not just a want. If someone needs like a short-term loan right now, what's the advice on that? Because we know that going to some of these lenders, as they call them payday loans, that's not the route to go. So if someone is in a crunch and could use a small personal loan or a small loan of any kind, do you have any advice for where they would turn?
Yeah, there are a lot of online, what we call marketplace lenders available now, right? And so really it's just short-term personal loans. They can range anywhere between 6 months to a year to up to 5 years, where we've seen certain loans. And really it's just a matter of the interest that you're willing to pay. These loans are going to have a little bit higher interest compared to your traditional, car note or mortgage, but it may be better than paying 23 or 24% interest on a credit card. And so I would do your research. There's a lot of great websites that provide options with different online lenders. And I've seen some people have some success with it. If you can avoid it, right? Let's say that most of the stuff you're going to buy at Home Depot, if you already have a Home Depot credit card, see if there's enough room in there to build that stuff in. There's no sense in opening up a new line of credit if you don't need to. You're going to have to pay that back plus interest.
Gotcha. So be smart about it.
Mm-hmm.
Getting back to the credit cards, because again, that's such a big issue for so many. I just weeks ago, before the state was shut down, we were all, sheltering in place, so to speak. So a couple of months ago, I was visiting a friend and the mail was laying on the counter. And I just happened to look down and, on the outside of the envelope, it said, zero balance transfer. You can transfer $20,000, zero balance. Tell me about those. What's the good, the bad, the ugly with these, transfer all your debt onto one credit card and you've got zero interest for the next 12 months?
Yeah, the play there is to plan to pay it off within that balance transfer period. If they're providing 12 months or 18 months of interest-free transfers, go ahead and try to get it paid off within that time frame. What normally happens is that, there was a study done several years ago that showed about 30 to 35% of Americans just do not pay it off within the introductory point, and we really need to plan towards doing that. The other danger there is running up the credit card that you transferred the balance from. And so we have to be very disciplined to not rack up debt on two different credit cards, right? Just because we moved one to the other doesn't mean that it should give us free rein to increase that balance as well.
So let's say I have a Visa card that I've got $12,000 on, just hypothetically, and I'm not able to pay it off at the end of the month, and I'm just paying a little at a time each month, and it's 14.9% interest or something like that, and I transfer it to the zero balance offer. Shouldn't I cut up the old Visa card? Shouldn't I just get rid of it so that I can't put myself at risk?
I think that cutting up the Visa card would be a good measure. Just don't close the account. One of the things that makes up your credit, around 35% of it, is how much available credit you have. And so you're going to want to keep the account open because that available credit is going to help your credit rating. But cutting it up and just destroying the card might be a good idea to help us with our own self-control.
So just to be very clear, you're not advocating borrowing any more money. You're just saying don't close the account.
That's right. Don't close the account. Keep that zero balance.
Emanuel, what advice do you give clients, have you given clients over the years that we haven't covered, that you think is important to mention right now, especially in these times?
Yeah, in these times, I mean, it's the idea of emergency savings right now is just front and center. We are talking to consumers that have had the means and the income to be able to put money to the side, and then all of a sudden this pandemic came around and they didn't have anything to fall back on. So if there's a way for consumers to automate their savings and make sure that they have a good 3 to 6 months of emergency reserves, that's really important. And start keeping track of your credit report. If you're receiving a deferment or you're receiving any kind of assistance from your lenders or your bills, and they're telling you that they are not going to report negatively on the credit report, make sure that's the case. Check your credit in a couple months and start the dispute process for any that may have negatively reported against you.
I really appreciate your time and all the important personal or consumer finance advice that you've given us today. For any of our viewers who might want to apply for help or apply for a consultation with Money Management International, where do they find you guys?
Yeah, the easiest way to find us is online at moneymanagementinternational.org.
Gotcha. Emanuel Rivero, thank you very much. We appreciate you coming on with us here at ABC Action News. I hope you have a great rest of your day.
Thanks so much for having me.